Hello everyone, greetings. Thank you for watching our videos. I hope the previous videos were educational and helped you with a good understanding of the QuarkPlan platform. And not just that, it also helped you understand the flexibility that it offers, the power of the platform which we internally use to build EPM solutions. Today we are going to talk about QuarkPlan, which is our planning and budgeting solution. Just to recap, QuarkCube is a modeling cloud platform using which you can quickly spin off functional solutions such as a planning and budgeting application, a financial close and consolidation solution, a revenue or cost analysis model, constant currency analysis, and so on. The business cases are many out there. You can spin off all those business models on QuarkCube in a very simplistic fashion. We provide 4 solutions out of the box as pointed out on the slide. QuarkPlan, which is our enterprise planning, budgeting and forecasting solution. QuarkClose, a solution that helps organizations to close their books faster. It's a financial consolidation application that has comprehensive accounting logic in it, such as intercompany eliminations, currency conversion, translation adjustments, all of that baked into this particular module. Now, both QuarkPlan and QuarkClose are solutions that every company's Office of Finance requires. It is their bread and butter, and I will be doing separate videos for each of these solutions provided by QuarkCube. The other 2 solutions, QuarkFlare and QuarkMerge, are one-off solutions, meaning QuarkFlare is focused on helping startups with managing their cash status, the burn rate, the revenue, the sustainability overall, so that they do not implode themselves before they stabilize. And QuarkMerge is targeted to help companies with cash surplus looking to inorganically grow by helping them throughout the M&A cycle, right from say target shortlisting to due diligence all the way up to implementation of the acquisition. So anyway, back to our main topic of the day, which is QuarkPlan. Let us start by understanding some of the most important elements that any finance executive or accountant or any other stakeholder for that matter in the finance team looks forward to when we are talking about a planning and budgeting solution. And then let's understand how they are addressed in the QuarkPlan application. The first one is agility, which basically means the ability to often change or frequently modify the plan based on recent developments. So basically you can no longer build an annual budget and let it rest in peace. You need the ability to change it at any given time of the year. Second most important thing is scenario modeling. Various versions of your budget depends on internal as well as external factors such as material costs, tax implications, different methods of cost allocation, etc. So scenario modeling is important. Third most important factor is the ability to derive certain aspects of budget or plan based on drivers, both internal and more importantly external. And lastly, we need the flexibility around defining assumptions at every account level, because while some accounts require manual input by planners, several others fall into the categories such as zero-based budgeting, trend-based or predictive accounts, driver-based calculations, and in the case of capital assets, right, certain decision models like the internal rate of return needs to be applied. Right, now that we have some of the high-level problem statements, let us look at what QuarkPlan has to offer. First, the system has financial intelligence. What that means is, based on the natural account type, the system understands the debit and credit nature of the account, which account has to be subtracted, which account has to be added or aggregated, etc. For those companies that deal with multiple currencies, QuarkPlan also supports multi-currency capability so that the entities and the subsidiaries can enter the plan numbers in local currency, and then the group head could actually review and approve the numbers using the parent currency. The application also provides integrated planning capability, and what this means is that you could plan all aspects of your organization, be it the administrative expenses, be it the capital expenditure, sales planning, human resource, workforce planning, etc. You can plan and have a holistic view of the plan at the summary level accounts across the organization. QuarkPlan, not to mention, is highly customizable, meaning you could define assumptions at an account level and decide which methodology you need to employ at every line item within the natural account hierarchy, even if it meant some AI or ML based algorithm. Not just that, you could have an account follow manual input in one scenario, while it can be driver based account in another scenario, therefore allowing you to perform various scenario modeling, right? What happens if this happens, what happens if that happens? All of those scenario modeling can be done. Not to mention, we support both top down and bottom up planning, which is a very basic requirement of every planning activity. QuarkPlan also natively supports task flows, which is basically a series of predefined list of tasks that various stakeholders have to perform with specific timelines, with specific date ranges, so that the organization as a whole knows what to do, when to do, and therefore completes the budget cycle on the planned date, on the due date. Let us get into the demo, but before that, let me theoretically explain the end-to-end planning and budgeting cycle in QuarkPlan using personas, representing the various stakeholders participating in the FP&A activity. And then it will be easier to demo in the product. Let's assume that we are towards the end of the calendar year 2020 and we would like to start off the budget for 2021. The first step would be for the functional administrator to kick off any setup activities such as creating new scenarios, copying prior year data, creating a new task list, defining assumptions, and so on. Then comes the actual business users from multiple departments, right? We could have a revenue planner log in and then budget the sales numbers, account for the average price of the product, account for the number of units to be sold, etc. And then the cost planner would come in to budget for both direct and indirect expenses. By the way, this could happen department wise as well, okay? We could have various stakeholders across the various departments come in and then budget for their respective departments. The system would then aggregate the budget numbers across the organization for a holistic organizational level consolidated view of the budget. The direct expenses would obviously be impacted by the headcount planner, who will budget for any new hires or employee terminations. Not just that, the headcount planner could also plan for any promotions that may happen within the next year, so that the salary expenses can be accurately accounted for based on the band, the levels of the employees. So in the demo, we shall play out this flow, and while at it, I will also show a few of the methodologies that are employed for budgeting, such as driver-based budgeting, zero-based budgeting, predictive planning, and some of the various methodologies that exist out there. Let us dive straight into the demo. So let me first walk you through the user administration screen, right? I spoke about multiple stakeholders participating in the planning and budgeting process. So if you go into the user administration screen, I've just created some dummy users, for the role modeling of the demo flow. So the first user is Rev Planner, then I have the Cost Planner, and then I have the Headcount Planner, and then I have added myself as the functional administrator. So I will be logging in as one of these 4 users and trying to role play their personas. And how do they differ from a role access? So if you go to the application security administration, every time you add a user, right? So you select the QuarkPlan application. So these are the various roles that you can assign to a user. So for Murali, I've added myself as an administrator. So for revenue planner, I have added him as a revenue planner. I've given him a revenue planner role. For the cost planner, I've given the cost planner role, and then for the headcount planner, if you notice over here, I have given the headcount planner role, right? So that is how you control access. So basically what the role does is the headcount planner, for example, he will not be able to modify or input or update data for any of the revenue accounts, and vice versa. The revenue planner will not be able to modify or change any of the headcount numbers. So that is how the authorization comes into play within our application. Now that we have covered the user administration piece, let's log into Quark portal and then QuarkPlan and see how the planning and budgeting works, right? So let's sign out of the Quark admin, and then this is the Quark portal. This is our entry to all the modules, right? Whether it's the Quark Close, Quark Flare, or QuarkPlan, we access it from Quark portal. So if you sign in, you will see our platform, and then QuarkPlan, then the Quark Close, all the applications in one place basically. So let's go to QuarkPlan. So we have logged as the functional administrator. I have given myself an administrator role. Once I log in, so to kick off the fiscal year 2021 budgeting cycle, the first thing that I have to do is basically do the setup. So how do I do the setup? I go to this screen called Planning Assumptions, and then here I start off by creating a scenario. Now you could have multiple scenarios which could represent different versions of the budget. It could also represent the budgets of different departments within your organization. For example, I could add a budget just for the sales and marketing team, right? So, and then sales and marketing, I'm just trying to budget the top line numbers, the revenue. So I go in the account hierarchy and then I select the P&L. Department, now this is where I select only the sales and marketing department, right? Similarly, I could have a second budget or a third budget for the other departments, and eventually everything will get consolidated, right? You will get to view a holistic view of your budget numbers. Product, let me choose all products over here. Period is all periods, and then the year, as you know, we are trying to budget for FY 2021, so I select the fiscal year 2021. So this is basically the scenario manager where you can create multiple scenarios and you get to control many of the assumptions, many of the tasks, and all of that at a scenario level. And then, like I said, everything will get consolidated eventually and give you a holistic view of your budget cycle, right? So I'm not going to create this scenario, but I'm going to use an existing scenario. So once you select the scenario, right, you get to define some of the assumptions. What I mean is what you see on the rows are all the natural accounts from your chart of accounts, right? And then at an account level, at an account scenario and year level, you can decide on what the budget driver is going to be for each of the accounts. For example, your rental income is going to be derived based on the prior period trend, meaning whatever your rent was in the last fiscal year, a percentage increase will be applied, and then the budget numbers for the current year will be derived. Similarly, let's look at your interest expense. So you want to assign a predictive planning methodology for budgeting your interest expense, whereas your miscellaneous expenses, right, you want to apply zero-based budgeting, meaning you want to input that number from scratch in the 2021 budgeting cycle. Again, you could have a different version of budget, like budget version V2, and in budget version V2 you could say miscellaneous expenses in this version of the budget is driver based, right? So depending on some other criteria or some other accounts, you could say the miscellaneous expenses is going to be a calculated account. It's going to be driven by a driver, right? So this is how you get to define the assumptions at a combination of an account, scenario and year level. All right, so once you have the assumptions defined, you can choose to copy the prior year budget or the prior year actual into the scenario that you just created, right? So in most cases you may want to just copy over the prior year actual numbers. The moment you click on it, the actuals from fiscal year 2020 will now be copied to the newly created scenario that you just created. All right, a couple of things that I would like to cover on the screen. So you could, in one of the earlier videos I've talked about avatar hierarchies. So basically what that means is while you're bringing in your actuals into the system, basically to build a variance report between your actuals and budget, you may bring in actuals data at a much granular level. For example, your revenue from operations could have these many line items that you see on the screen, right? But when you're trying to budget the same, you may not be entering data at this granularity. So the account hierarchy in your budget scenario will just have revenue from operations because you want to budget at this number, right? So this is totally possible because of the avatar hierarchies that the platform supports. Alright, so as an administrator, another thing that I can do is to prepare a task list, right? There are going to be various stakeholders who will be participating in the planning and budgeting process. Each user needs to know what are the tasks that he or she needs to do, what are the dates when they need to start working on those tasks, by when they need to complete, and so on, right? So as an administrator, I can create a list of tasks like what you can see on the screen over here, and then assign start and end dates for the tasks, and then also assign users as you can see on the screen. Now the same information is also displayed in a Gantt chart where you see the dates on the columns and then the tasks on the rows, and then you will see that as and when I log in as the revenue planner or the cost planner, when I start completing my tasks of inputting the budget templates, these tasks will get marked as completed, right? So then there is a third view where you can get list of how many tasks are there for each of the users. For example, the revenue planner has 3 tasks and he's not yet completed all the 3 tasks. The cost planner has 2 tasks, but he's not yet completed the 2 tasks. But I'll show you how, as and when you progress in the application, the tasks are updated automatically as well. QuarkPlan also natively supports workflows and approvals. So basically, when the revenue planner or the cost planner comes in and populates the input templates, those budget numbers will come in here for approval. Right now the budgeting cycle has not started, so you do not see any transactions here, but as and when the numbers start flowing in, they will come up here for approval, so that the functional administrator or the supervisor can come in and approve those numbers before they can be published. Okay, so now I will log out as the administrator and then log in as the rev planner, right? So this is the persona representing the revenue planner, and then once I sign in, you will see, or you will notice, that there are only revenue based input templates that are accessible to this user. Okay, the cost based templates or the headcount based templates are not available to the revenue planner. Now the revenue planner can do 2 kinds of budgeting. So the first one is direct revenue planning. Okay, now here what he can do is he can view the last year actuals copied over to the budget scenario. He can select some department over here, and then he can directly make adjustments on a particular budget scenario. right? So let's look at what are the revenue numbers that have been copied over from the prior here by clicking on view revenue. So this is an example of visual based planning where you have the revenue template at the bottom over here, and then there is a graph that has basically 3 data points, right? It shows the prior year actuals, actual 2020, and then there are 2 line graphs. The first one representing the budget version 1 based on adjustments, and the second one representing the budget version 2 based on percentage adjustments, right? Now what you see over here is the revenue simply copied over from the actual 2020 into the budget scenario 2021. The revenue planner can make adjustments on top of the prior year data, like on add adjustments. And then I will expand adjustments, and then over here you can see the columns representing each of the months for the fiscal year 2021. Where you can input the adjustments for the budget numbers. And on the rows you see the accounts, the departments that you selected, and the various products. Alright, let me quickly select the cells and add some adjustments. So I'm selecting all the available cells, and let me populate it in bulk. Say 1,000,000 every period, and I'll try to randomize the data by manually changing some of the cells. And then you will see how when you save the data, the graph immediately reflects the change in the budget numbers for the budget which is a version based on direct adjustments. Now there's another way of direct adjustments, which is percentage based adjustment, right? So you have the revenue numbers copied over same as the last year actual. On top of that, you just want to adjust it based on percentage, right? Let me click on percentage adjustment, then show you how to do that as well. You expand this section, and then you see a pretty similar grid that you used for direct adjustment, except that here you will have to enter the percentages. Now, just to ensure that the graph is visual, I will input a pretty large percentage. So let's increase by say 175%. Then when you click on save, the budget numbers reflecting an increase by 175% is saved in the database and also reflected in the graph that you see over here. Right, so this is how a revenue planner can come and budget its numbers using either direct adjustments, direct amount based adjustments, or percentage based adjustments. And the other way to budget is using driver based planning, right? So here he does not adjust the revenue numbers directly, but rather he accounts for some of the drivers. For example, the average price of the product, the number of units sold, and so on, right? So that's what he is going to change over here, and then the revenue in this case is a calculated account, which is calculated based on the underlying drivers. All right, so here again, let's populate the average price that we are going to assume for a certain product in the fiscal year of 2021. So let me say, okay, the average price is going to be say 35,000. Again, I'm not populating each of the cells individually just to save time. Then I'm trying to randomize some of the data. Right, then I save it. Now the revenue will not be impacted. You know that the fourth line graph that is displayed on this chart represents the driver based budget, but it's not showing any movement here because you have only budgeted for the average price, right? Now what are the new acquisitions, new on top of the number of units that you have sold prior year, what are the additional product sales that you are planning for the new year, right? Is something that you are going to input over here. Let me again select, and let me say I'm going to sell 150 new units across all the periods of the next year. Then you will see that the driver based budget is quickly showing the impact of the number of new product units that you're going to sell next year. Right, so this is an example of how a revenue planner can budget his revenue either by using direct amount adjustments or percentage adjustments, or by using some drivers such as the average product price or the number of units sold and so on. Now that the revenue planner has completed inputting the data for his revenue planning, he can mark this particular task as completed. Remember, the functional administrator had prepared a list of tasks and assigned to the various stakeholders participating in the planning and budgeting process. The revenue planner has done his job, so he can mark the task as completed over here. Right, the task status is updated, and when the administrator or the supervisor logs in, he will know that this particular task has been completed. Now let me log out as the Rev Planner and then log in as the Headcount Planner. Now Headcount Planner can actually budget for a couple of items, right? So the very first thing that Headcount Planner can do is he can account for any new hires, or he can account for any employee terminations, employees leaving the organization. That's number one. The second aspect that he can actually budget for is companies have bands within their organizations, right? And the Headcount Planner knows exactly how many employees exist in each of those bands, because every band is associated with the salary range, and depending on the number of people on a certain band, the salary costs can vary. Alright, so the Headcount Planner comes in, and then first he has to look at the opening headcount. Now what this tells us that in the various bands available, right? So in band 1 as of last year there were 40 employees, band 2 there were 20 employees, and so on. Now in this fiscal year, the fiscal year that he is budgeting for, which is FY21, he can either increase the number of employees in a certain band or even decrease, right? Because there could be some employees moving in and moving out. Alright, so let me click on promotion in and out, and then you should be able to specify, for example, if in February there are 5 employees moving out of band 5, so that would be a -5, and they're moving into band 4, so that would be +5. In April, if there are employees moving in from band 6 to 7, right? So say there are 8 employees moving out of band 6, and then all of them are being promoted to band 7. You can account for that. Similarly, let's say 20 employees are being promoted from band 1 to band 2, and then you quickly save the data. You will see that the budget numbers are updated accordingly depending on the promotions that the Headcount Planner is planning for the year. Now how does this impact? It actually impacts the direct costs, right? Because there is a salary range associated with the band, and therefore the direct cost, which is the salary expenses, will be impacted. The second aspect that the Headcount Planner can plan is the addition of new employees or terminations, right? So he can budget for that as well, right? So he could say, for example, I'm planning to hire 20 additional employees in band 2 in the month of March, or he may budget for some employees leaving out of band 5 in the month of June, and so on. So basically whichever month he wants to budget whatever number, he can do that, and he can click on save. That is all the Headcount Planner has to do. these numbers will in turn become an input to the cost planner, which is the user who is going to log in next. Alright, now the cost planner will log in. I'm signing out as the headcount planner and logging in as the cost planner. Now the cost planner will determine the average salary for the respective bands that are available in an organization, right? So he will click on direct cost planning, and this is where he gets to make adjustments to the average salary cost. Okay, so the numbers that have been input by the headcount planner combined with the input that the cost planner is providing to the system, the direct costs will be calculated. So again, what is he looking at? He's looking at the average salary as of the last month of prior year. So as of December 2020, band 1, the average salary was 20,000. The average salary for band 2 is 40,000, and so on. He can come and make adjustments, right? So he could say that, hey, from Feb onwards, for a given band, I'm planning to increase the salary by, say, 5,000. Right, so that's what he's doing over here. Okay, from July onwards, for band 6, there's a salary increase of, say, 10,000. Right, and then once he inputs this, he just clicks on save. So basically the average salary, the planned increments to the salary, and the numbers that the headcount planner just input, right? The number of new employees, the number of employees being terminated, the number of promotions will help you arrive at your direct costs. Now once he's done that, in this case there is a workflow associated with the direct cost numbers, so he will have to send it for approval. Now the supervisor will have to approve these numbers. Only then it will roll into the final P&L. I will show you that when you log in as the functional administrator, you will see all these direct costs come in for approval. On similar lines, the cost planner can also plan for any indirect or overhead costs. So you can go into overhead planning, and then as you can see, there are various categories of indirect costs. You can choose which of them needs to be displayed on the graph that he is seeing. Okay, let me just uncheck quite a few of them so that the graph is less crowded, right? And then all the indirect costs basically follow the zero-based budgeting model. Then he can go and input on top of the actuals data that has been copied. Say for example, if he, let me populate for the entire year. And I say okay, then when I save data, you will see that the data is saved and the graph is updated as well, right? It's a straight line because I just input the same numbers for all the period. Now moving on, predictive planning. So for travel expenses, we have configured the budgeting methodology as predictive planning. So if you see, the first 12 months of travel expenses is pulled from the actuals, which is the 12 months of 2020, and then for 2021 there is a system projection, and then you can also have two variations of projections depending on the slope and intercept. So let me see this, and then there you go, you have a projection based on slope of 100 and intercept of 150. You could have another version of that, and then depending on which projection you want, you can push them to the budget numbers. So this is about how you can do predictive planning with within QuarkCube. That's it. So the cost planner also has completed its tasks. Now let us log back as the functional admin and then see how the numbers look. Right, so I'll log back as myself because I'm the functional admin. So the very first thing that I wanted to show you are the approvals. If you remember, the salary details were submitted for approval, so they will come up in this screen. And then the functional administrator can either approve or reject over here. Okay, and also the task list. I just want to quickly show you the task list. So the revenue planner, if you see, he marked his task as completed, so the task is marked as completed and the color is being shown in green. And once the rev planner, the headcount planner and the cost planner are done with budgeting for their respective departments, you can then come and use Quark Connect to build the income statement and the balance sheet, as you can see on your favorite tool, which is Excel. And all these numbers are coming directly out of QuarkCube, the budget numbers that you have input in the QuarkPlan application. Right, so this is the power of Quark Connect. You can have Quark Connect is basically the REST API using which you can set up direct connections to build neatly formatted balance sheet and net income and cash flow statements. So that is all I had for today's demo. I hope you found it interesting, and should you require more details on QuarkPlan, feel free to reach out to the contact details provided on this slide. Thank you and see you in the next video.